Today, we're talking about the very provocatively named Section 13sex of the Income Tax Act 58 of 1962. Now, this allowance is amazing because you're able to deduct up to 100% of the properties that you've purchased or improvements that you've made to qualifying properties. The basis of this is that you need to have new and unused properties or have improvements, and these units or improvements need to be used for the purpose of carrying out trade for the year of assessment. This is an allowance that is deductible for 10 to 20 years, and you have an additional allowance if you are having low-cost housing. We'll get into the nitty-gritties of a couple of things. First of all, what are these new and unused buildings? What is the difference between a building and an apartment? How do the calculations work for Section 13sex? What is the qualifying criteria? This is a very exciting tax act, and I can't wait to explain it to you guys. Let's go. An example is given to us to define low-cost housing. An apartment qualifying as a residential unit in a building located within the Republic where the cost of the apartment does not exceed $350,000 and the owner of the apartment does not charge a monthly rental in respect of that apartment that exceeds 1%. So an apartment means that the cost to build that singular unit did not exceed 350,000 Rand, and the rental charged on that apartment does not exceed 1%, which in this case, at the maximum of 350,000 Rand, 1% would be 3,500 Rand, and therefore the rental income should not exceed that. So even if you did build it at the threshold of 350,000 Rand, but if you charge 3,800 or 4,500 Rand, you would not qualify as a low-cost housing, and you can't make use of the specific deduction that comes with low-cost housing, which is at an accelerated rate. Number two, the difference between an apartment, which was 350,000 Rand, and a building is this. A building is that which the cost of the building did not exceed 300,000 Rand, and the rental income charged in respect of that is 1%. So you've got your normal apartments and then you've got your standalone buildings, but the standalone buildings, to qualify for low-cost housing, needs to be a maximum of 350,000 Rand, with the rental income not exceeding 1%. So again, in this case, if we take 300,000 Rand as the amount that you spent on this building, you cannot charge more than 3,000 Rand to the tenants occupying that building. Now, the implication of the low-cost residential unit is that you are able to deduct 10% for 10 years. You have an extra 5% deductible. High-cost housing, you're able to deduct 5% of the building cost over 20 years. There's a lot more to learn about Section 13sex. Please feel free to click the link. Once you click the link, you're able to click book a consultation, and we can sit down and chat about how this could potentially be applied in your individual capacity, in your company, or just in your future plans for investing in property.